You're an accountant serving B2B clients, some in the £250,000 to £500,000 range, the rest under £250,000, most under VAT threshold, mainly focused on year-end filings, compliance, and bookkeeping. Some advisory. Low touch, back office. And now, the signs are showing. Revenue is plateauing, client contact is fading. This is a textbook case of AI commoditisation, pressure meeting, compliance-centric positioning. Let's break this down. Field deconstruction. What's actually being paid? For core function. Transactional oversight, data hygiene, statutory compliance. Judgment moments. Occasional, possibly around tax efficiency, allowable expenses, or structuring advice. Contact surface. Thin. You're not in their boardroom or planning cycles. Automation risk very high. Bookkeeping and filings are exactly what AI-driven platforms like Xero, QuickBooks plus AI layers are targeting. Even micro businesses now DIY this with tolerable risk. Human edge, where you still outperform. Contextual judgment, clients still need interpretation of what numbers mean in context. That's not in the ledger, it's in their market, goals, risk tolerance, and timing. Proactive synthesis, you see patterns across clients, and could advise on what's emerging, pricing, cash flow pitfalls, funding prep. Decision support, helping clients decide when to spend, how to reinvest, or where to cut. That's where the trust premium still lives. Complexity. Nexus, where AI breaks down cash flow. Crisis management, when they need to juggle VAT, supplier payments, and payroll. They don't want a dashboard. They want a calm, trusted human. Exit acquisition prep, structuring for a sale, or preparing for due diligence, still emotionally and strategically driven. Growth inflection, when a micro becomes a small business. That's a messy moment AI can't model well. Human accountants can be the architects of the transition. Follow the money. Client spending is shifting. Clients are no longer paying for records. They're paying for risk mitigation and future clarity. Compliance is a sunk cost, but decision support, still budgeted. Micro businesses are still price sensitive. But those on the £250,000 to £500,000 edge, they'll pay more to stop making dumb financial mistakes or to speed up growth intelligently. Trust capital. Emotional safety equals retention. You're currently invisible to them most of the year. That makes you easy to cut. Becoming part of their mental boardroom, where they loop you in early, is the moat. But that means reconfiguring from silent compliance provider, strategic financial co-pilot. Strategic repositioning. Pivot options. Productize. Advisory. Offer a flat fee quarterly boardroom finance session, not to crunch numbers, but to shape decisions. Preempt questions. Bring insight. Pattern to insight offering. You see 50+ small businesses financials. What's the trend? Package anonymized insight, and what profitable £500,000 businesses are doing that you're not. Fix the contact surface. Automate the admin. Humanize the high-trust touchpoints. Regularly send client-specific flags. 3 things I noticed in your accounts this month. Essence. Summary. 3 moves to make now. Reframe your role. Stop calling yourself a compliance accountant. Start positioning as a financial clarity partner, especially for growing firms. Monetize insight, not hours. Shift from reactive tasks to proactive synthesis. Bundle insight plus access. Engineer contact moments. Create structured reasons to talk, not about what's been done, but what's next.